Hey, fellas, we lost John. Let me bring John back in.
Say, what happened to our man?
There we go.
I thought I was here. I'm back.
You're back. Welcome back. You're so back. Steven, congratulations are in order, my friends. Bittersweet. Sad that you're moving on from Swan, but well, obviously, stay connected, be bros for life, connected in Bitcoin. So yeah, where are you going, man?
Thank
For
you,
those
brother.
who haven't heard yet.
Yeah, so I'm joining Nakamoto as the VP of Investor Relations. They're one of the new Bitcoin treasury companies kind of hitting the public markets. Very exciting. The main difference is we're going to be focused on spinning up new Bitcoin treasury companies in international markets. So this is the team behind Metaplanet and so on. So thrilled to be joining, and obviously like very sad, extremely bittersweet to be leaving Swan. And we're still going to be very closely connected, and I'll be a Swan fan for life, and I'm sure we'll do a ton of stuff. I'm sure I'll be back on the show at least sometime, so I'm not going far.
Of course, always welcome back home on this show, my friend. Stanley Cup playoffs, we were talking about it just right before we got on the show. John, I know you're a big fan. Give us your prediction, and what'd you think about that game last night?
It's exciting, man. I'm a huge hockey fan. You guys have probably heard me talk about this a little bit. I think playoff hockey is just a beast of its own. Like, I know people who don't even really like hockey, but they tell me, they're like, "Oh, John, I love watching playoff hockey." The guys are just all into it. You had a game last night. One team is down 3-0 in the first period. They come back. They go up a goal. Florida scores with like 10 seconds left in the regular time, and then it goes into overtime. And then Edmonton's probably second best player scores a goal with like one hand on his stick in overtime. We were talking before this. I think it's like a top 10 all-time Stanley Cup Finals game in NHL history. So
it was wild
for the sports and hockey fans out there. It's a really good one.
We got Isaiah Douglas with us back on the show from Swan Private. How's it going, Isaiah?
It's good. I didn't stay up after it went 3-0. I turned it off. I'll expend my late night watching as a sports fan in the Eastern time zone for the Pacers tonight. So I'm in Indiana and excited about that one. So
nice. It's been an awesome finals so far. Yep. I think that thing's going to 7. Well, welcome back, everyone, to Swan Signal Live. It is Friday again. We're doing this thing a little bit earlier than usual. You can check out Steven with David Bailey on Twitter Spaces at our usual time, 2 p.m. Eastern, to listen to them talk about Nakamoto and Bitcoin and treasury companies and all that good stuff. So we're doing this a little bit early. I had to switch it anyway, too. It's not just for Steven. Both of us, it worked out well. So it's nice to be here on a little bit of a morning rip. And kind of get the day started this way. So I like it. We are going to get into the week's news as usual. Plenty to talk about. Lots of fun things to get into. New content, interesting, world news to discuss as well. So let's just dive into it. Since we're talking about treasury companies, and we've got the new VP of Investor Relations from Nakamoto here, let's talk about the treasury companies. And here's a chart we can kick it off with, fellas. This is the holdings, Bitcoin holdings by entity type. So this includes public companies, private companies, the ETFs, exchanges, etc. And here it shows that now these entities that I just listed off hold about more than 1/3 of all of the Bitcoin in circulation. So this is incredible. The rest of it is on exchanges. So the exchange has been flat since like 2021, basically. And that kind of makes sense, that, the market kind of finds an equilibrium. And so the Bitcoin on exchanges would kind of equalize out. But you can see the Bitcoin held by all of these entities has just skyrocketed over the past 4 years. And here we are now with them holding well over about 3 million Bitcoin, 2 to 3 million Bitcoin. So this trend, I assume, Steven, you think this trend's just going to continue based on moving over to Nakamoto. So give us your take on entities holding Bitcoin.
Yeah. So in, I want to call it 2020, maybe 2021, Alan Farrington published an essay called Wittgenstein's Ruler. And in it, he uses the kind of thought experiment that, people try to ask the question, is Bitcoin a new form of money monetizing from zero all over the world globally in this decentralized way? And people say, yes, that's what's happening. Other people be like, no, that's not what's happening. And he poses the question, well, if it was happening, what would it look like? And then argues that that's what Bitcoin looks like. Bitcoin looks like what it would look like if that was happening. And I actually have a similar way of thinking about these treasury companies. If global capital markets were suddenly realizing that Bitcoin was going to be a crucial financial asset for the future and that they didn't own any, what would that look like? And I think it would look like these treasury companies. I think it would look like companies using all of the tools of modern finance to quickly speed run all the Bitcoin acquisition they haven't already done. And that doesn't, and obviously the people that are doing this, they're at the front lines. They're maybe JP Morgan doesn't fully get that it's going to need Bitcoin, but maybe MicroStrategy does, or MetaPlanet does, or whoever. But what'll happen, you'll have this wave of treasury companies. And then in the future, if JP Morgan needs to have a deep bench of Bitcoin collateral, they will acquire a treasury company. They will buy the company to acquire the treasury. They will not go to the market and buy it. And I think there's one big reason, and this also, there's many reasons, but there's one reason that comes to mind. And I think this also justifies why they traded a premium. Let's say MicroStrategy was sitting on 100 billion in Bitcoin. How much would it cost to acquire a similar treasury? The answer is more than 100 billion, right? You can't buy $100 billion of Bitcoin, or the number of coins that MicroStrategy has at this time, for 100 billion.
Because it'll move the market.
Because it'll move the market, because of slippage, because of impact, all these things. And so because the cost to recreate the position is higher, not only I think that justifies a premium, but it's why these companies are actually whoever needs the Bitcoin collateral for business lines will just acquire these treasury companies. They're just the companies that are realizing it first. So that's kind of my high level view on just like what's going on here and why it's happening.
What about on the trend? Does this continue? And we've talked about this before, but maybe you've developed your thinking on this a little bit. How much demand is out there? We have a $280 billion market for bonds that convert to equity, something like that I saw recently. That's a pretty big market.
Yeah.
So is there enough demand out there for this, for more treasury companies to come online over the next few years?
I think so. I was originally saying it wouldn't surprise me to see $100 billion come in from treasury companies this year. And then I saw a report that got done basically just looking at the existing players that are here today and expecting something like maybe 72 billion from those players, which now makes me think I want to revise higher because there's going to be more than just the existing players. I think we found out about a new one today. Pomp is launching almost $1 billion acquisition vehicle. I think there'll be many more of these. And so hundreds of billions of dollars, I do think, is on the table. I think this is the big theme this year. And part of it is because capital wants to own securities. It's just a simple kind of fact. They're limited in what they can buy. They're familiar with it. There's legal protections. There's all these things. And the way it shook out at the end of the day, and, we can, as Bitcoiners, we can maybe, wish more people would just buy the bearer asset, buy the spot asset. But at the end of the day, there's a ton of capital that can't do that, and they're going to go through these investment vehicles. I think at scale, I think we really see global capital move into this year, pretty far beyond anything we've seen in the past. And that's my view, and that's how I'm positioning myself. I hope I'm right.
Yeah. John, there's criticism out there about Bitcoin treasury companies that, this is going to drive some kind of blow off top. These are like the ICOs of or the NFTs of this cycle, and that they're going to be oversubscribed, over leveraged, and it's going to cause, a big price drop, crash. Do you what do you think about the merits of that idea? And Isaiah, definitely weigh in on this as well if you want.
Short answer for me is wake me up when there's a company taking 1 year secured debt to buy Bitcoin. That would cause this kind of self-reinforcing sell-off. The way that the companies are doing it now, it's just that's not really in the cards. Most people have pointed out that it kind of takes and it depends how each company does it. But let's just say a company, first off, if you issue equity, you don't have to sell your Bitcoin to cover your equity. It's just shareholders lose their equity value. If you do have debt, whether it's traditional regular way debt or convertible debt or preferred stock, yeah, maybe there's a coupon associated with that you have to pay. And maybe some of them come due. The true debt instruments come due at some point. Most of these companies are not issuing it with a maturity that's less than 4 or 5 years. So they'll have ways to pay these. This is not your traditional leverage of someone going on Binance and going 100x and the price moves a little bit and they're completely underwater and they get liquidated. This isn't even a Bitcoin backed loan with a reputable company where you have a liquidation point. That's just not how any of these work. I've pushed back on people on Twitter who've kind of said, oh, this is the next cycle. It's coming. I've said, is this just a feeling you have? I'm not against vibes. If you just have a vibe of that, fine. But I asked them, is this just a feeling, or are you seeing a company that you can point to today that you can say, yes, look, this is how it's going to play out. They're going to have to sell their Bitcoin because this, and this. And no one really has a good response for it. So right now, I think it's just people kind of saying, hey, this could happen, which I don't think there's a ton of value in that because sure, it could happen. But the takeaway for me would be no company is doing it in a way today that makes me think that this is the next self-fulfilling. They start getting liquidated and selling Bitcoin.
I can't imagine that the bond market would be very interested in someone or a company that was not using what Saylor calls intelligent leverage, right? So if you're irresponsibly, and this is really what kind of differentiates these companies from each other. If I'm, looking to invest, I'm going to look at the management team and their practices and see if they're competent, right? That's one differentiating factor. I'm going to look at the underlying business and see if there's any synergies between the, leverage Bitcoin equities they're offering and the underlying business itself. And then, because there's not a whole bunch that differentiates these things. If you get a company that's starting to offer, 1 year notes, I would imagine the demand wouldn't be there because it's quite risky, right? And these people understand that. Isaiah, do you have any thoughts on the Bitcoin Treasury Company kind of developments over the past couple months?
Yeah, I think John talked about it where people don't like it. And I think part of it is they have a view of the way that Bitcoin adoption should happen versus the world we live in, which has been similar to lots of other things. And you can have conversations with lots of different people. It's well, this is how I want things to work versus how they actually do work. Right. And there's plenty of opinions on things outside of Bitcoin the same way, where it's okay, yes, ideally you want this, but this is how it's going to play out. And Stephen touched on it. There's some really legitimate reasons why. Could they blow up? Absolutely. Right. There's going to be businesses that adopt a Bitcoin treasury strategy that are hyper successful, a la MicroStrategy. There's going to be some that are not as much. And I think sometimes people have circled in on GameStop, for example, where they're we're not going to, tell people what we're doing. And then you have Dylan with Meta Planet saying, we're going to tell you everything we're going to do and we're going to just go run it. And so I think, the market's going to pick and choose, again, management teams or those that they feel execute well. And I love the interaction earlier this week on Twitter. I don't know if you all saw the Pierre Rochard, Jim Chanos, and others back and forth. Yeah. It was really good. And I was I can read Pierre's response and be yeah, I'm picking up 25% of that as far as things that he's saying. And then there was a meme that came out with his response to someone else's, an Anon response about Bitcoin treasury companies. And then the argument of why they don't work. But I think the TLDR is if Bitcoin is better money and this is a superior asset, it's good for individuals, it's good for companies, and it's good for nation states. And ultimately that's true. And I think any Bitcoiner would agree with that. How someone goes about doing all that, then, it's subject to opinions and execution and other things. But yeah, having a company with Bitcoin is that better or worse than a company without? To me, it makes total sense. Like, I would much rather have a company with Bitcoin, right? The same way as an individual. It gives you way more optionality. And I think, Steven's talked about this too. Sometimes these companies, they are going to acquire a lot of Bitcoin. And it's like, we don't necessarily know exactly what we're going to do with it in the future. But you know what it's going to do? It's going to open up a lot of opportunity. Acquisitions, growth, R&D, like all these things. And so it opens up some really unique channels versus share buybacks. Okay, is that beneficial? Okay, we're going to overpay for a competitor today. Like, what else are they doing with these free cash flows or raising money? And I think it's always like, what's the alternative? I'd much rather you buy the asset going up 40, 50, 60% annualized, personally.
Well, and that's part of what's going on here, right? So like Bitcoin is in the monetization phase. We are in this period where Bitcoin is rapidly monetizing. And the reason this matters is if I'm a Bitcoin company, I'm a treasury company, am I confident that, let's say I had $100 million. On one hand, I buy Bitcoin with $100 million. On the other hand, I take that $100 million and I invest it in a new product line or some new team or an acquisition. How confident am I that that 100 million invested in product acquisition, whatever, is going to outperform the growth rate of Bitcoin at this stage? Personally, I wouldn't be, I would have a hard time being like, yeah, I'm going to outperform Bitcoin with invested capital over a 5 or 10 year horizon, because right now we're in the monetization phase. So it is rational as a corporate operator that you're just going to take your capital and you're going to buy Bitcoin. And that's the most accretive thing that you can do for your shareholders right now. Eventually that changes. And I think this is the thing that people get tripped up about, is they're like, they're so hung up that all these companies are doing is buying Bitcoin. But that is the rational choice right now, because you're just not going to get that rate of return from doing R&D on a new product or launching some new lending or whatever it is. It's going to be hard. Sure, some people in the entire global economy outperform Bitcoin? Yeah, of course, but that's hard to do. And it's rational to just buy the coins right now. And then at a later stage in the market, when that growth rate starts to temper off, then it's a question of like, okay, well, we have this huge strategic advantage of this large Bitcoin treasury. What do we do with it?
I had a post recently that went into some of this, and I wanted people to separate out, and anyone who's like not a fan of this strategy because you're into Bitcoin for like self-sovereignty and all this kind of stuff. I get it. Like that, most people didn't come to Bitcoin because they were like Bitcoin treasury companies, right? Like I don't think anyone really did, unless you came in very recently through MicroStrategy. But people who've been in for some number of years, that was not the thing that attracted you to Bitcoin. And I also understand that this is financial engineering, like kind of by definition, by Bitcoin treasury companies, speculative attack on the dollar, whatever you want to call it. But what I was trying to point out to people recently, and I kind of condensed it, was if the following 3 things hold true, then Bitcoin treasury companies just logically follow from it, whether you like it or not. Number 1, let's say the Bitcoin price rises against the dollar over time. Doesn't mean it does it every single year, but clear uptrend over time. That's number 1. Number 2, if corporations can borrow and issue US dollar securities at a speed and a magnitude and on terms that other people cannot, individuals cannot, that's number 2. And then number 3, you always have to remember there's the Bitcoin treasury company, they're the issuing side. What about the investor side? And Steven alluded to this earlier, but there are investors, huge pools of capital. Again, all this is true, whether you like it or not, that they actually want or need or are like physically required to have what I would call adjusted or securitized Bitcoin exposure. And when I say that adjusted or securitized, I'm referring to securitized like in the form of a security, meaning the equity or preferred stock or debt or whatever. But some of them can't take, when I say adjusted, I mean like the risk profile is adjusted. They can own one of these convertible debt instruments that gives them some upside, but pays them a coupon, and they still are due their principal, right? That's different than Bitcoin just holding the asset. They can do one, but they can't do the other. So again, the 3 things: Bitcoin rises against the dollar, corporations can borrow at ways that other people can't, and the investor side of the equation wants or needs what they're providing.
Yeah.
I don't see a world where any of those three things stop being the case in any time soon. So it just logically follows that Bitcoin treasury companies are going to exist. At caveat, this does not mean they're all going to be successful and you can just buy them at any point and your stocks go up. Definitely not saying that. I'm just talking about the phenomenon in general of the Bitcoin treasury company. This is going to exist for years to come.
Love that. Totally. Completely agree with everything you said there. And it's a really good
It
way
was
of
really
thinking.
well put too.
Yeah, really.
We do have a question I'll throw up on the screen here from Lydia. Hopefully Lydia is still watching. Are there any regulation concerns for BTC equity companies? It seems too good to be true. I'm worried about a 2008 style rug pull. It's a good question. I think the answer is under this administration, no. There could be, if you get like an anti-Bitcoin administration sometime in the future, maybe at this next presidential election, you could see it like it would be, there's potential for a regulation or a law to be passed. It's like you can't hold X amount of, Bitcoin or X percentage of Bitcoin in your treasury. Like you're limited to like 20% of your Bitcoin in your treasury. Something like that could happen. I don't think it will, even if there is an anti-Bitcoin administration in a few years, simply because Bitcoin maybe already is, and certainly will be, in my opinion, by then, so integrated into our financial system and into the treasuries of public companies in this country that you just couldn't do that. It just wouldn't happen. It wouldn't be politically viable.
Couldn't agree more. I think Bitcoin's going to get so integrated here in the next 3.5 years that, it's not even really worth speculating what that looks like with an anti-administration. I do think, because that's what I've been saying this since 2021 when I was on the phone with clients, that like your number one protection for Bitcoin is just like getting enough people owning it so that any hostile action against Bitcoin impacts just like the vast majority of Americans and their savings and their wealth. And like at a certain scale of ownership, it just becomes like completely untenable.
Incentives matter. And yeah, if it's the best asset to own and people have the incentive to want to own it, like, yeah, you're not going to outlaw it or you're going to get, unelected. You're not going to run. You're not going to win. And I think we saw that a little bit with the presidential election of just people saying, I'm a single issue voter. And that's a bigger and bigger block. And especially as folks that own Bitcoin equity companies, Bitcoin holders, others, as that monetization process happens, as Stephen talked about, there's a bigger and bigger pocket of capital that can then go back certain candidates. And so it is reflexive from that standpoint where it gets harder and harder and harder to unseat that. So, yeah.
Yeah.
I think Lydia posted a great question here, and I'll speculate like a little bit longer term. I don't think there's any near-term risk of a regulator, any politician regulator in this administration, definitely not coming out and saying, oh, you can't do this strategy anymore. The only way I could see something like that happening would be if there's like a true mania in the Bitcoin price, like we go to some crazy level in Bitcoin, and these stocks are going parabolic, and you see like 100 public companies announce that they're doing this, then maybe some regulators would just be like, this is crazy. We need to get our arms around this, like that kind of thing. But even in that environment, I don't think it's going to be a rug pull where they like change a rule overnight. I think you would see hearings, like there would be a congressional hearing where like interviews get done. And, Elizabeth Warren says, I want to shut this down right now. And, most people don't agree with her. So I think there would be lead time if something like that happened. But again, that's a huge if. This is only like if there's a mania and you're literally seeing like 100 public companies do this. Otherwise, I think Bitcoin just gets more entrenched in the system over time. And it makes it even harder for regulators to come out and say, oh, I know we were letting you do this for years, but like now you can't do it. But I just wanted to speculate a little bit. It's a really good question.
Yep. Good question.
Yeah.
Let's take a look at some data real quick before we move on from the topic. Let's see. Let me just make this full screen because it's pretty small. This I'll actually turn off the logo as well. Here we go. So these are some of the larger Bitcoin treasury companies that are offering leveraged Bitcoin equities. And you can see there's the number, their MNAVs here, which they're multiple of the net asset value, the value of the Bitcoin they're holding on their balance sheets. which is kind of a key metric for these companies that investors watch. You can see the amount in the treasuries here, 21 at 42,000, Nakamoto at 4,000. Now that's gonna increase pretty quickly here in the coming months. Anyway, these are big numbers, and that just reflects real demand in the market for these kinds of financial instruments.
Yeah, 76 billion. It's 56% of the AUM of the Bitcoin ETFs just with those companies listed there. So it's a huge number per Steven's point at the beginning, and there's going to be more.
There are more already. There's a ton of international, there's a ton of other things spinning up, and there will be more. I just wanted to add this point to John's point a little while ago. We were talking about like these companies and like what they're doing and should they exist, why will they exist, and people talk about them not having a business model, right? Like this core business, but I could even push back on that, right? Like what these companies do is search for the opportunities to arbitrage the fiat system against the Bitcoin system. Yep. And so you will continue to, the capital market landscape is truly a landscape. There's all these little things that no one thinks about. There's pockets of debt, there's inefficiencies, there's international markets, there's arbitrages, there's all these things. And a Bitcoin treasury company is a company that can leverage a unique position as both a public entity and maybe specifically another factor to basically find the cheapest cost of capital and buy Bitcoin. And as long as Bitcoin appreciates more than their cost of capital, it is accretive for shareholders. It adds value for shareholders. That is a business in the same way a miner looks for the cheapest cost of energy and then uses that energy to mine Bitcoin.
Yep.
One is mining capital markets, the other is mining energy. And that is a real substantial business. In the same way, if you had an arbitrage hedge fund or something, you could buy something in South Korea and sell it in the United States for 10% more. I mean, that's a business, right? They might not make an iPhone, but like you have a real thing there. And that's what we're dealing with here.
And I just want to hit one more point since we're still on the Bitcoin treasury stuff. Brady, I thought you brought up something interesting when we were talking about like, what if an issuer did 1 year secured debt, and like, would the investing side really like that? And I think the answer is no. Like even if they're covered because it's like over collateralized, whatever, they don't want the collateral to be liquidated. That's not like a good outcome for them. Yeah. And I'm also reminded of this guy, Jim Chanos. You've probably seen him. He's like a famous short seller. He's been throwing cold water on MicroStrategy recently on Twitter. And he's been making some comparisons to like global financial crisis, RMBS securities, like this kind of structuring. And what I think he's missing is that the like lower tranches of these RMBS vehicles, those were a bet on housing prices never declining at a nationwide level. And people were okay to make that bet. They're like, yeah, sure. There's no way home prices are going to decline. Real estate's like the safest investment in the world. And he's trying to say that something similar is happening in Bitcoin. And I just think he's way, way off base. Could we get there at some point? Yeah, sure, maybe. But like the bond investors are not making investments being like, oh, Bitcoin is the safest investment in the world. It always goes up. They're not treating Bitcoin like real estate. So that there's no comparable, like the low level tranche of an RMBS security. It doesn't exist for MicroStrategy.
In fact, the opposite. Every investor thinks this thing could crash 30 or 40%.
Exactly. Exactly. So if there is going to be a mania and people doing stupid things, we have seen none of it actually play out yet.
100%. And that's such a key point. Like it just isn't happening. No one is loaded up on risky debt. No one is super over leveraged. Could it happen? Sure. We just haven't seen it yet though.
Yeah. And like, if you think about these bond investors as clients, they're massive, like super wealthy, super sophisticated clients, right? It's not like you can dupe retail into, putting a bunch of money in, pumping a stock, and then dump on them. Like that's not what's happening. They're understanding these instruments in a very, sophisticated way. So this is just, I don't think the setup is really comparable to anything in Bitcoin's history where this might be some kind of like pump and dump, unsustainable thing. Like these are sustainable financial instruments, that professionals are evaluating and investing in. So that's, maybe we can just leave it there. We have this Paul Tudor Jones clip. Let's watch this clip and then we'll discuss.
But it would be some combination of probably gold, vol adjusted, Bitcoin, gold, stocks. That's probably your best portfolio to fight inflation. Vol adjusted, because the vol of Bitcoin's obviously 5 times that of gold. So you're gonna do it in different weights.
You said at one point you would allocate 1 or 2% of your portfolio to Bitcoin. Is it still?
Yeah, I mean, I think particularly now that the roadmap is clear, then I mean again, if I'm a policymaker, I'm going to run really low real rates. I'm going to have inflation running hot, and I'm going to tax the American consumer to get out of my debt trap. And that's exactly what Japan, who's the most fiscally constrained in the world, doing. And it works until the population throws you out because you let inflation get too hot.
Yeah, it's notable.
He's on the train.
Yeah, he's on the train. Nothing stops this train. It's a big, he's kind of been saying that for years, so there is that. But it's just so notable, I think, when someone like Paul Tudor Jones tells people that, hey, you should own at least a couple percent in Bitcoin. And let's be clear, if everyone owned 1% in Bitcoin, the price would be it'd be massively higher. So, we could only be so happy if everyone bought 1% of their net worth in Bitcoin.
I was waiting for him to say, no, I think like it's 5 or 10% now.
Yeah.
Because he's like, now that the roadmap is clear, he's like, and I was thinking like, oh, he's going to adjust this thing. And maybe he does think that and just didn't, actually say it there in the answer. But it sounds like his conviction in Bitcoin is just grown over time, which makes sense because, the way things have played out over the last couple of years since I've heard him, talk about his allocation suggestion, has made Bitcoin, like de-risk Bitcoin even further and made it very clear that this thing's around to stay. And it's buy some Bitcoin, y'all. Buy some Bitcoin. Buy more Bitcoin. Hold on to it.
Hey, can we ask Isaiah? I'm curious. So Isaiah came from like the RIA personal investing world. I came from more the institutional side. Isaiah, I'm sure you're close with those people to some extent. What would you say is the average financial advisor's view on the 60-40 portfolio today?
I think most of them still would likely agree that it makes sense as like a baseline to start with, candidly, even though it's gotten beat up so much. But you'll see various different articles and things say why it's dead and then why it's coming back. But I mean, I would say most would say, it's only stocks and bonds. I can remember, tweeting about Bitcoin and talking about Bitcoin to advisors and to friends and to people that I was kind of like loosely affiliated with. And the idea was like, why do I need anything other than stocks and bonds? And I think the easiest way to look at that and understand like why it's probably still the case, you look at 401k plans. Where are most of the savings for most Americans today? They're in 401k plans. And what are the options in those? Is stocks and bonds. They basically have gutted everything else out of there because of lawsuits and other things, to where you can own equities, you can own bonds. And if you look at the like target date funds, where they'll say like, Vanguard's target date retirement 2060, 2055, it's pretty much all stocks and bonds. Maybe they throw in commodities, maybe they'll throw in gold after gold's ran, as impressive as it has recently. But for most, you maybe get real estate, you maybe get a little commodities, but it's mainly stocks and bonds. So I think 60-40 is absolutely where most people are and will likely continue to be for a period of time. I do think that it's changing. There are advisors I know that were anti-Bitcoin that are now like, yeah, ETFs, that was a stamp of approval. I'm cool with it now. You can own, 5% or whatever, but it's still very much that way.
And speaking of the ETFs, I do have this chart, and this is a perfect moment to show it. We've seen this before. This is the updated chart. This is 341 trading days into the IBIT ETF. And you can see It's just cracked $70 billion. And this is just the IBIT ETF. It's not all of them put together. But just how fast this has grown. It took 1,700 days for all of these other ETFs. It took gold's almost 1,700 days. It's to get to the $70 billion mark. This is just absurd. Is there anything we haven't seen anything like this in the ETF world? And this seems to be just one of the most bullish charts that are out there, the demand.
So going off this and then also circling back to that 60-40 discussion, the problem with this whole 60-40 proposition is that we live in a different world today. And this comes back to nothing stops this train. It comes back to we are living in a structurally different paradigm with different variables. And the same reason the 60-40 portfolio doesn't work anymore is the same reason Bitcoin was the fastest ETF to reach those targets. It's because the thing that we're all grappling with is this huge level of fiscal spending, this constrained debt scenario, the inevitability of inflation, and that there's no way out from this. And so you can't just structure this mild returning, almost index-like portfolio. There's a hole in the bottom of the boat and that's draining everything. And it's just not the same circumstances as when that investment methodology came about. And the huge problem is bonds. Bonds are the real problem there. It's the 40. And it's that the bonds are basically, they're basically losing money. They're net negative and they're going to get worse. And what investors need to come to terms with is, how do we replace the 40? Stocks will be fine. Just like Paul Tudor Jones said, if you want to, own some stocks, they will probably, as a group, marginally outpace these inflationary forces, but you need to do something with the bond component.
Absolutely. Go ahead, John.
No, you go, Isaiah.
I was going to say, probably one of the most proud moments or interesting moments is like talking about how bonds were dead money back in 2020 on a webinar when I was still an RIA. Like, I want to go back to that because what I talk about, Bitcoin, you should own gold and you should own real assets alongside stocks. It's like, I was talking about what Paul Tudor Jones did to a super small audience that no one was watching or caring about, but it was like this same conversation where this is dead money. And there's a world, as Steven talked about, to me, it's pre-2020 and post-2020. The world changed and people want to tell me or tell us or tell others around Bitcoin there's not enough history. Well, the world of the 1970s, 1980s, 1990s and using bond returns and stock returns, it doesn't matter. I'm sorry. Like, it does not matter because it is so vastly different than the world then that we're in the world now. And I really struggle with the idea, especially with advisors that will say, well, I have older clientele. They have to own bonds. Bitcoin is too risky. The riskiest position in Bitcoin is a 0% allocation. As PTJ talked about, you can dial up vol adjusted. 1 or 2 or 3% could still save someone's skin in retirement, even if they own the other assets, right? In Bitcoin terms, because you can offset it. It goes back to kind of Greg Foss's piece that he wrote a long time ago about using, Bitcoin as like bond insurance, where it was like a 5% allocation. I think he wrote it in like 2020. Like, that was a really good thought. And I think it can help a lot of bond investors. And you see why MicroStrategy's debt and their offerings are so widely oversubscribed, because this industry, which is the bond market's 3x the size of the stock market, is so hungry for returns because they're just, it's a spot where capital is going to die right now.
Yeah. And that's the beauty with these preferreds that MicroStrategy did. And it's the answer that Pierre gave to Jim Chanos.
Yeah.
Basically, his argument, you could sum it down as MicroStrategy takes the properties of Bitcoin and they then strip out the parts that are unsuitable for different pockets of capital. This is Saylor's like oil refinery metaphor, but they're saying, fine, a bond investor can't really be like directionally long Bitcoin. So we're going to take the upside from the Bitcoin and we're going to use it to pay a higher coupon on the bond that they can own. So while the bond investor can't own the Bitcoin, instead of making 4%, they're making 10% on the preferreds. And that way they're at least accessing Bitcoin, but indirectly. And so, Pierre's point is that deserves a premium. That's why MicroStrategy trades at a premium, or one reason why you justify it, because they're actually building financial products that can only be created if you own a ton of Bitcoin. And this is the point I've been making for a while. There are certain things which will only be able to exist if there are large counterparties holding a large amount of Bitcoin. You just can't do it otherwise. And that's why these treasury companies, in my opinion, are the best contender for like the future Bitcoin banks or Bitcoin financial services, because they will literally issue financial products.
I mean, this is like an arbitrage, or Pierre might call it a speculative attack, like one of the vectors of the speculative attack, meaning we're attacking fiat by bringing fiat and converting it into Bitcoin and the Bitcoin financial system, and doing it in like a massive, pipe coming in, like it's a high bandwidth speculative attack. The arbitrage here will go away eventually. It'll, because Bitcoin will become money. It'll become the money, right? And used very widely. It'll be $200 trillion market cap kind of thing. And at that point, there's not a ton of upside left in Bitcoin anymore to that really drives these financial instruments. So once the pipe brings in, this big bandwidth pipe brings in all of that money, the demand that's there for it, then what do these businesses do when they have these massive balance sheets of Bitcoin? Plenty of products and services to offer if you have a massive balance sheet of Bitcoin. And so they'll, like Steven said, there'll be Bitcoin banks, Bitcoin financial services companies. They'll be the Goldman Sachs of this new era. So that's where it comes. That's kind of the end game here, because I've heard people ask, well, what happens when there's less demand for these instruments, because Bitcoin is appreciated quite a bit, and that pace of appreciation is going down. That might be 30 years from now or something, but it will happen at some point.
Totally.
Yeah.
And I'll just add, you guys brought up a ton of great points there on the bond stuff, 60/40. I just want to add a point here, because I was talking with the Yahoo Finance folks recently about this. And anyone who's been investing for a bit, you may know that there are different types of trades or strategies, or like reasons why something might work out from an investment perspective. Just a few of them are things like mean reversion, trend following, value, growth, event driven, arbitrage, etc. In some senses, it's kind of shocking that 60/40 and like the people who recommend having 40% in bonds haven't changed that. Because to Isaiah's point, we're now 5 years into bonds being a terrible investment. Just to like put some numbers around that, you can take some ETFs that track bonds. So government GOVT is a treasury bond ETF. AG is a mix of treasuries, mortgage-backed securities, corporate bonds, and some other stuff. I think there's corporate bonds in there. But anyway, that's like more of a is there corporate bonds in there, Isaiah?
Yeah, there's
okay,
some.
Thank you. I should know that, but it's been a few years for me now. And then there's LQD, which is all corporate bonds. All three of those ETFs are down on a nominal basis over the last 5 years. Nominal. So not even accounting for inflation. Bonds have been horrendous for the last 5 years. So on the one hand, you could say, like, what are these people doing? Have they not been paying attention? I think the answer is that they think this is a mean reversion trade.
Yeah.
They think this is bonds have been bad for 5 years. Now's your time, because we're going to revert to the mean, go back to 60/40. But for all the reasons we just described, I think the Bitcoin community is kind of going on the record here saying, no, there was a particular period of time from roughly 1980 to 2020 where bonds did very well. We think we're entering, it's already been a multi-year period. Maybe it's going to be a multi-decade period where bonds do not do well. So that if you haven't heard that from others, that's kind of the investment thesis.
So there's even, I want to just drill down on one point you made. I'm just pulling up TLT, 20+ year treasury bond ETF. In the last 5 years, it is down 46%. Now, you guys are Bitcoiners. You're hearing 46%. Yeah, that sounds like that happens every few years, right? Like that's tough, but you go through it. No, this doesn't happen in bonds. Let's say the average return, because what were you making on those bonds in a good year? 3% a year, 4% a year, something like that. We're talking 10 years of returns wiped out. Like it's not close. It's like a cataclysmic drawdown in some ways.
This is my issue with, to John's point, there's notable people, huge followings, traditional finance. Maybe they run a bond ETF or other things, right? But it is this patient bond investor will be rewarded. that was tweeted in 2021. I'll resurface it because sometimes I like to troll a little bit on Twitter, but I'm still waiting for that patience to pay off. And it's like, you are really, really hurting people explaining that you just need to be patient in bonds when it is a math problem and they just don't want to run the numbers. And it's really funny to me that it is these crazy psychopathic Bitcoiners that are so delusional, yet it's the same people that want to sit in these assets that are doomed to fail, and they know they're going to fail because they think there's this big mean reversion, but they don't understand the world has changed. And it's really fascinating because, again, to highlight, the bond market is so much bigger than the stock market. It's so much bigger than the stock market, and there's so much money and wealth there. And to see that shift will be big. And I think a lot of that comes to Bitcoin. It's going to go to other places as well, but there's a lot of money that needs to find a home.
And you said it's a math problem, and I think this bears explaining. Bonds aren't really like equities in a sense. Like there's not this like, oh yeah, well, I think Nvidia is going to be great in 5 years, so I'm willing to pay more for it. Bonds are mathematical. It's a spreadsheet. It's how much it costs to buy it, what the yield is, what inflation is. And so when bonds break, they break. There's nothing else there. There's not like innovation and new product lines, and maybe, you know, Nvidia does something cool, or maybe whatever. It is a math problem.
Yep, for sure. Bonds are basically cash plus a little bit. And I think people are not realizing that the plus a little bit is not nearly enough to compensate you for what you're losing out in other ways.
And the biggest thing you said was nominal. That's the thing that also blows your mind. It's a nominal loss, but the real purchasing power, oh my gosh, is insane. The amount of loss that's happened in bonds.
Yeah. Brady, do we go? No, go ahead. I think you're going to go where I wanted to go.
Where did you want to go?
I feel like we got to talk about Saylor and Peterson.
Yeah, okay, that's where I was going to go.
Yeah.
So Michael Saylor, for you Michael Saylor fans out there, Saylor was on the Jordan Peterson show, or whatever his show is called, Jordan Peterson's show. And in my opinion, it was the best Michael Saylor interview since Robert Breedlove's Saylor series, which, by the way, Swan helped produce, which is pretty cool. Proud of that. That was because I think it turned out amazing. It's 12 episodes, super long. They get into all kinds of things, even outside of Bitcoin. Everything's tangentially related, but all kinds of history, and it's fantastic. Saylor's a really big student of history. Anyway, this podcast is great. Peterson brought out like stuff that I hadn't heard about Saylor's past, personal things especially. This is one clip that I thought was hit pretty hard. It was pretty good. Here, let's watch this one.
If it's ramping up in terms of its success, and let's say that that's exponential, because perhaps it might be, why won't Bitcoin just suck the investment capital out of everything?
It is, and it will. Okay. That's why I'm here. That's
okay. So what's the consequences of that?
It is, and it will. That was like the best like softball over the middle of the plate I've ever seen.
But it was genuine, right? Like, that was a genuine question. It wasn't just a layup.
It wasn't a setup. Yeah. Yeah.
I just want to clip that. It will. That's why I'm here.
It is.
Action video.
And it will. That's why I'm here.
You should have just got up and left and been like, this interview is over.
Yeah.
You're welcome.
That's right. Lynn Alden posted this meme because, like I said, we kind of got into some personal history I hadn't heard about Saylor, and apparently he was a big fantasy and sci-fi fan, and that he played war games, including Dungeons and Dragons. So here's this meme, and Lynn just is like the goat at memes. So it's the guy, about to topple over ever increasing size of dominoes, and the small dominoes playing Dungeons and Dragons, and then in the middle realizes software makes fantasy real, and then builds $100 billion company. That was great. I had to give a shout out to Lynn on that one. It was pretty solid there.
I haven't seen the interview yet, so when I saw this meme, I was really excited because I was a big Dungeons and Dragons player growing up. I loved D&D. I loved fantasy and sci-fi. I still do in many ways. And there's a lot of Bitcoiners that I think share that.
It's the cool nerds, Steven. I call them the cool nerds.
We're the cool
nerds.
nerds.
The cool nerds, right? Yeah. So Bitcoiners, largely the cool nerds of the world.
Knowing that Saylor was playing D&D at MIT makes me really happy.
Yeah, it's fantastic. So check that out. Any comments on that before I do another quick hit, guys?
John, have you ever
Hey,
played
John-
Dungeons and Dragons? Because I have not, so I'm just curious.
I have not, but I
Okay.
will say, and I was never really like a sci-fi person. I'm like a very literal thinker. I once came home from school in like elementary school and told my mom when I learned about a library, and I said, "Mom, you'll never believe this. There's a whole section of books about things that never happened." When I learned what the fiction, I thought the fiction section was going to be like 4 books, and the rest of the library.
You were just like reading biographies and history in elementary school.
That was how I thought as like a 9-year-old. I know it's ridiculous. So
That's amazing.
I was never a sci-fi guy, but some of Sailor's comments, and Lynn has talked about this recently too. And I think of her as like, very, very rational thinker, but she likes the fiction, and she's put out some things about
She's writing a book.
She's writing a book. Yeah.
I've read a draft of the book, lucky enough, and it's fantastic. You guys, it's a sci-fi. It's really like lots of action, a little bit of Bitcoin sprinkled in there. It's fantastic. I can't wait to until she drops that.
Exactly. So I think there's value in it. Historically, I was much more of a non-fiction person, but really the punchline is like for creativity, even if it's a book about stuff that is not going to happen in your lifetime, it gets the creative juices flowing. So I think there's, for entrepreneurs, for creative people, I think there's a lot of value in it.
Yep. Yeah. So John and Isaiah, next time we're together, I'm going to be dungeon master for an adventure, and it's going to be epic because you guys need to play some D&D. Let's do another quick hit here. There's some rumors circulating around that Besant is emerging as a contender to succeed Jerome Powell, whose term is when it's coming up soon, right? Later this year.
I think it's
2026.
I think it's 26.
It's 26. Yeah. So that's interesting. Obviously close to Trump. I think Trump has been pressuring Powell to lower rates. So maybe this is a path to that if Powell's not going to do it. Any thoughts on that one, guys?
So Besant has denied this. That doesn't mean inherently that it's not true, but just for what it's worth, they have come out and denied this. But who knows? There's a lot of games being played.
Kind of has to deny it.
Yeah, exactly. Like
Yeah.
he can't say yes. So it's like, I don't know. But throwing that out there. If Besant became the Fed chair, that would be like it would make him like the CEO of Nothing Stops This Train. Like it would be like an ultimate victory for Nothing Stops This Train.
Yeah, exactly.
That sounds like a subdivision of Vibes Capital.
The CEO of Nothing Stops This Train. You got to tweet that. So let's hit Bo Hines and another quick hit here. Bo Hines is the White House crypto director. And he's been talking about the SBR, which was the executive order signed in January. There was like a 90-day, kind of limit, like not limit, but like goal. Like let's get some budget neutral ways for us to acquire Bitcoin through the executive branch in 90 days. It's been a little over 90 days. And this is, in the clip, he basically said, a lot of things he's already said, but he closes up talking about this by saying, "I think Bitcoiners will be extremely pleased." So that's interesting. A little bit of hopium here toward the end of the show for everyone. See what happens. I'm fascinated.
I love being extremely pleased. I don't know about you guys.
I enjoy it.
Yeah,
it's usually a good time.
Yeah.
All right.
Have a good time.
Yeah. Okay. Anything else, guys? Quick hits from your side before we wrap this up.
My first episode is dropping.
Oh yeah, I've already got this, buddy.
Boom.
Right here. Yeah.
So we're recording a limited series. So I've started and have run the Swan Private Wealth team since its inception. And obviously, as we talked about at the beginning of the show, I'm going to go lead investor relations for Nakamoto. But we're recording a series, just distilling everything I've learned. Probably, having 10,000 calls about Bitcoin to thousands of clients over the last 4.5 years. It should be pretty good, I think. And I think it'll be different than what you expect. It's not just going to be like technique or anything. It's really explaining the client culture that we have at Swan.
And I hear there's going to be a book version to come out to complement it, sort of a sequel. How to Sell Bitcoin and Walk in the Sun by Stephen Lupka and Q. Is this true? I've heard rumors. I'm not sure if this is true. Can you confirm or deny this?
You know, I have some pretty binding legal agreements right now, so I can neither confirm nor deny. But I guarantee you, if you watch the series, you will learn how to both sell Bitcoin and walk in the sun.
Fantastic. All right. Great show, guys. That was a lot of fun. Let me just tell our audience about a couple of things. We've got BTC in DC coming up September 30th and October 1st. This is going to be a really unique event in the Bitcoin conference scene. It's going to be hosted at the Kennedy Center, the historic Kennedy Center in Washington, D.C. It's right next to the infamous Watergate Hotel, where there'll be events going on as well. So really cool space to have this conference. You can expect policymakers and Hill staffers and lobbyists and industry leaders coming to join and talk about Bitcoin policy. And this is obviously, I think, an incredibly important time, this particular year, where we began it by the administration signing an executive order to establish a strategic Bitcoin reserve. I think it's especially important right now. So check out btcindc.com, grab yourself a ticket. Prices will go up. So come and join. It's going to be a really cool scene. So hope to see you there. And also check out Mara, thanks to Mara, who helps to secure the Bitcoin network and to support this show as well. So thanks to Mara. They also hold a ton of Bitcoin in their corporate treasury. So hats off to them, what they're doing for Bitcoin. And then, of course, please check out Swan Private. And all three of these guys, Stephen, as you just heard, really spun up and has headed up Swan Private for the past 4.5 years. John's a managing director. Isaiah's on the team as well. And we rotate in a bunch of the Swan Private team onto the show, and we'll continue to do that. Isaiah crushed it today. It was awesome. You can check out Swan Private. We're your partner for generational wealth. We build strong relationships with our clients. And you're going to hear a lot about that on Stephen's show, How to Sell Bitcoin. The first episode drops today. We've got a comprehensive Bitcoin wealth platform. We've got great security and custody services. We have insights from Bitcoin's brightest minds. We produce great content and share it exclusively with our Swan Private clients. And maybe my favorite part about Swan Private are the exclusive events. We have a lot of fun getting together with clients all over the country. We have dozens of cities we host Swan Private happy hours in, and get to meet our clients and hang out. And they're very popular because it's hard sometimes to get out and find your Bitcoin crew. So anyway, thanks everyone. We will see you next Friday. I will be gone. John's going to be hosting the show. So enjoy that, John. And I will be watching or listening to the show live with my AirPod and my phone in my pocket, walking around the amusement park with my daughter for her birthday. But I'm going to listen if I can. All right, guys.
Nice,
take care. Bye, everyone.